good. It's an honor to be here. We are an engineering firm. I've been an engineer my whole life. Won't go too far down the details. I've been designing machinery and equipment since I was a little kid. My dad used to work at Pan American Airlines. He taught himself how to machine parts and went to machining school and went from a machinist at Pan Am in New York to the lead technical manager of all of the maintenance services. Basically, he ran the biggest machine shop east of the Mississippi. And I've never not liked knowing how something works. I'm the kid who took everything apart. We only had one washing machine growing up because Dad would take it apart when something broke, and he'd be damned if he was going to pay somebody to fix it or buy a new one. And we had the oldest lawnmower on the block. It had, we called it the Christmas lawnmower. It had red parts and green parts and purple parts. And when something broke, he'd wait for garbage day to take somebody else's lawnmower, take the parts he needed off that and put it together. And so I come from a long line of people who don't like what I call not knowing what the rules are. And so when somebody gave me the bug and mentioned Fibonacci to me as an engineer and said, hey, you should look at the markets, it wasn't hard to make a lot of money and lose a lot of money and figure out that I had no idea how the washing machine worked. And it has been an obsession for 10 years now to disassemble how markets work. And it's taken me on quite a broad journey, places I didn't expect, faster than I thought I would ever go. I ended up leaving engineering to focus on this completely, and a nice byproduct of my obsession has been working with traders like yourselves and helping people demystify how this stuff works. I'm only just now coming to the point of feeling comfortable putting money into the game. And I've learned now over 10 years with a 90% failure rate across the industry, that's not the worst thing. And so I want to show you a little bit today about how we've constructed a tool. We've built a tool for you. Think of it like a hammer that you can go into the markets with and see things that you're not supposed to see. We are the world's only producer, only provider of predictive time-based indicators. We tell people what should happen to the right side of the chart based on the behavioral analyses of the institutions, the 1% that we believe are screwing traders all over the world every day. And so this is the picture I want to start with. I'm going to come right out of the PowerPoint and just look at charts. I am not a PowerPoint guy. I think a lot of times you can say a lot of things in a PowerPoint and never really say anything. But this is really what drives me. You are playing on an unlevel field. One of the things I learned about early on, and I've since heard over and over again from about 10,000 conversations over the last 10 years, we have about 4,000 customers, is that everybody is in the market in the wrong direction at the same time. Everybody is in the market in the wrong direction at the same time. That means 90% of people are short when the market is going long. 90% of people are long when the market is falling. The banks, the institutions, we believe, the 1%ers are the people who are creating traps, creating stop runs, who are creating falsified entries, that are doing everything they can with every conventional indicator that's out there because people have a blind spot. People have a blind spot. And I'm going to shoot all the way to the end of my presentation, and I want to tell you what your blind spot is. Your blind spot is that we don't remember what happened in the past. It's something called the recency effect. There it is. So they did a study on human beings. Congratulations, if you're watching the webinar, you're part of the species. And what they've discovered about us is that we only remember what's right in front of our face. That's why we hear these platitudes like those who do not remember the lessons of history are destined to repeat them, right? I'm trying to explain to my sons things that I did when I was their age that they should probably avoid, right? The same conversation my dad had with me, and I ignored everything he said because I'm going to be different. Scientists use the term myopia in regards to how people, especially traders, approach the market. We forget that there are patterns, and banks don't want us to remember that there are patterns. And so today I want to introduce you to a set of tools that I've built for futures, forex, equities, options, commodities, whatever you're into, whatever there's a data feed for. I've built a program together with my team that analyzes the behavioral times that banks actually move the markets and project those times forward into the future. So a typical webinar for me is unlike most webinars you've ever been to. I will send out forecasts for the market every Tuesday night for Wednesday and Thursday. In essence, I give people the signals in advance. It's really easy to look like a genius after the fact. And I have a really sore spot for scams that trading rooms run and the way that they kind of cherry pick and make it look like there's no way you could have lost when in fact everybody did. So what I do on Tuesday, I send out these histograms for Wednesday and Thursday, and then we come out of the markets on Thursday and look and see what did they do, what actually happened. And so this tool you can see this morning has sort of two things going on in crude, and I'm going to cover a whole bunch of markets here together today. Everything you see to the right side is a behavioral forecast. In essence, what we've done is built our own algo. We've built our own artificial intelligence, if you will, and we've taught it to hunt. Meaning we took a tool that the banks have created and intended to destroy your trading account, and we've sort of flipped the polarity. We made it a bloodhound of sorts, and we said, go find the times where the banks are pushing the markets. Go find the times where the institutions are manipulating and corrupting price action, right? So banks don't behave like sports teams that follow rules. They behave like casinos. They want you to put another quarter in the machine. They take that quarter, it goes down into the depositing box, and then they want you to put another quarter in the machine. So every line on this chart represents a time in the past on the CL 1-minute chart where the banks have pushed. And they don't want you to remember this. They want you to think that, oh, there's a double top, and oh, there's a divergence here, and oh, the 100, 200, 300, 700 moving average, oh, and you're constantly off balance. And the computer is saying, hey, dipwad, it's 12:51. You know what they usually do at 12:51 lately? They try to push it up. Don't forget. Hey, dipwad, it's 12:12. You know what they've done almost 60–70% of the time over the last several weeks at 12:12? They've tried to push it up. I'm taking apart the washing machine. Every one of the times on the lower half of the chart is an algorithm answer to the question, when are the banks screwing with these markets? When are they pushing them consistently? There's no black box formula here. I'm sick of these black box, I can't tell you how it works, proprietary pieces of crap. Every line that's on here is statistically significant. It's essentially saying 138 exists because that's when price has consistently fallen exactly at that time over the last several weeks. Does that make sense? So this morning, when you look at crude, every one of these dots and signals were times that were based on a behavior pattern that has consistently recurred. Now, I agree completely with the former guest. I have tremendous respect for him. 30 years, that's not something you shake a stick at. And one of the things that he said that I resonate most with is this idea of finding the times that are aligned with the direction of the trend. And so one of the mistakes a lot of people make when they do behavioral analysis like this is they think every signal is a hammer and a nail. Every dot is something I've got to do something with. And what we teach our customers is this: look, if the prevailing trend is up, your best chances of options trades working, of long trades working in futures or forex or whatever you're into, is waiting for them to pour gasoline on a fire that's already burning. So all of these times below, 9:47, 10:12, 10:29, 10:54, 11:26, up to and including 12:12, were times that the algo, the software, had come back and said, listen, over the last several weeks at this time, there's an algo that fires. There's a prop trader at a firm who got instructions to drive this thing higher. There's somebody whose responsibility it was, whose orders it were, to screw with the market and push. And so when people ask, what are the biggest moves going to be in relation to time? My answer is always the times in the direction of the trend. Now, the more perceptive of you have already figured out that for everything that has a beginning, there's an end. So if the trend is up, for example, you now have time windows. You now have times that are essentially based on a statistically relevant behavior pattern. See, it's hard for me, the certain personality type I have as an engineer, it's hard for me to listen to someone who says, well, I look at this and then I look at that, and then I check what this thing is doing and I look at the settlement price and I look. It's too much information for me. There are too many constraints. There's too many nuts and bolts and combinations of putting things together. So what I've put together to help my sort of ADHD brain is the system that essentially says, look, the market's moving up. It's probably going to go higher at 1054. You have until 1116 until the first remnants of selling pressure arise. And that might be a good place to exit. 1126 arrives and the computer goes, hey, numbnuts, it's 1126. It looks like a double top, but guess what? They're going to try to drive it higher. All these traders that are selling into the high after that are probably going to get screwed. Don't make a mistake of shorting here. If you're not sure, sit on the sidelines. And by the way, you have until 1146 before the first sellers start to come in and take profit. Huh. Thank you, computer. And so I'm using the computers that the banks use to screw with the markets to screw with them. When they move the markets, I'm watching. When they move the markets, I'm sitting here saying, you know what? I'm not really interested in what I think. I'm interested in what they do. So just previously, before I was announced, there was a signal at 1236. Can everybody see that on my screen? At 1236, the computer was saying, Michael, over the last several weeks at this exact precise time, I know your indicators don't say this, but the banks have proven themselves insofar as consistently pushing price higher. Be careful, because that window on a 2-minute time frame usually only lasts until 1256. And that line, that dot, is waiting for me. We are the only company that I'm aware of that is producing information on the right side of the screen. Most traders are focused with and obsessed with these momentum indicators and cycles and WYSIWYG, MACD, CCI, Kumasayama, Kumbaya indicators, and the fibs and the profiles and the lines. And we forget, dude, it's 1236. Well, what am I supposed to remember about that? Have you not been paying attention the last several weeks? No, I'm focused on the last few bars. That's where the mistake is made. And that's where we become more like slot machine pullers than traders. Okay? So when you look across the spectrum of these markets and we look at things like the S&P, I was chomping to get on here earlier. I had a beautiful setup at 1050, and I knew it had an ending window at 1240 on the ES. I had these times where I was waiting for things to happen. And I saw this little stop run here, and I knew all the traders were getting short right before the 1050 window. Did you know banks run stop runs right before they're about to engage their algos? I'll say that again. Did you know that banks run the stops right before they engage their behavior patterns, their prop firms, their institutional trades, all of that stuff? They need this to fuel the move. So they suck as many of you in as they can to that short right before they come back up through your stops and finally go in the direction that they want to go. And now here we are at 1240, and there's the anticipated chop, the stopping of that run that we're expecting. The next train that might leave the station is at 150. Why is this 150 line here? because the computer, without emotion, without any kind of insanity or paranoia, has said, listen, over the last several weeks, 150 in this market on this day has consistently provided a manipulative push up. And so this morning at 10:50, I was waiting for that run up. So I'm able to take these little risk trades now, and I know how long they have to work. At 7:45, I could enter long, but I'm only going to put my stop just underneath, because if it doesn't work right away, the trade is wrong. It's not good. Okay? If I want to hold and maintain this position like I'm going to all day today, if possible, I want to see this blue line violated. I want to see that the selling pressure has ended. The accumulation phase, this little phase here that I'm expecting, I want to see this chop eventually end, and I want to see a breakthrough. And that signals to me that the selling pressure is over when I see punctures of those lines. Okay? And so now over here, coming into the GC trade, guess what? It's 12:56. I don't want to play anymore. I'm done. No, thank you. It's 12:56. Well, what do? We wait until 1:16. Or I wait for the selling to be over and take a breakout trade. If I see price above this blue line, it means that whatever selling was going to take place is over and the market is ready to continue higher. Does that make sense? So one of the things that we're able to do is we're able to control the sensitivity of the look back. So right now I'm using a swing indicator in my data analysis. And again, I can do this with any market, soybeans, bonds, cattle, hogs, any of the indices, the notes, it doesn't matter. Wherever the banks are playing, whatever sandbox they're in, this decodes the language that they're using to communicate with each other to manipulate the markets. And so right now in here, I'm telling the computer to go back 7 days and 14 days with an 8-point swing strength. And I'm telling the computer, look at every point in time over the last 2 weeks that's had an 8-point swing strength reversal, and bring that information back to me and project it forwards. And you'll see throughout the rest of the entire afternoon now, I have a plan. I have a bus schedule. I know when the planes are leaving and when they're arriving. We do this in every other area of our lives. We base things on behavior patterns. But when we get to trading, we forget that even banks, no matter how powerful or quickly their algos are firing, are subjected to routines. They have to do things at certain times. So just here before, where I put that yellow arrow at the 12:51 signal, can everybody see what just happened live here in front of everybody? The market opened at 63.55 and it went straight up to 63.65, $100 per contract. And I only had about a 5-tick risk to see if that would work. Understanding and knowing when these signals are coming in the future, I believe, is the hidden link between what makes people successful and what makes people fail, because you're playing with the bank's toys. Every time they eat a sandwich, you're sitting there like a dog waiting for some crumbs to fall off the edge of the table. Saying, hey, what are you doing here? Oh, I knew you were going to eat now. Well, what do you want? I want some of your sandwich. All right, just have a little bit. Okay, but a little bit can be thousands of dollars at a time. So one of the things that we can do is we can go out and look at higher time frames also. The system is not
order filled.
Is not respective of time frames. I can analyze anything from a 1-minute time frame out to an hourly, 2-hour, up to a 4-hour chart with warp. And that's where things start to get hazy. That's where things start to get kind of muddled. And I wanted you to see, those of you that look at higher time frames, that we can also look for those signals as well. So a lot of the stuff from the last two vendors, you have some really great ideas about the direction of the market and where you're going to look for these moves to occur. But no one I've heard so far has mentioned the when part. When do I look for the entry? And when we survey people and ask them how important is time to you, 80% plus of people say timing is critical. It's maybe the most critical thing. Then when we ask them, well, how many indicators do you have? How many tools do you have to help you figure out what time to enter? 90% of people say, I have no clue. kind of flying by the seat of my pants here, Mike. So in the euro, you can see here that this morning, we had a signal at 1 a.m. Eastern time telling us to look for selling pressure until this signal right here, coming into the 1 o'clock time frame. And you can see what happened the last few times that we had a buying pressure signal in a downtrend. There's either a small retracement or a consolidation. There's either a small retracement, or consolidation. And that's consistent with market theory. If we look at what traders have understood market theory to be over the last 100 years, we have accumulation phases and distribution phases. Wyckoff pioneered this idea, right? He's the father of modern volume spread analysis, right? And so when the market is in an uptrend, we expect that in a selling period of time, there will be a small retracement down or a reaccumulation phase in this markup area where things slow down, consolidate, and then break out. Well, in the case of the euro, you can see here that in a distribution phase, we expect small pops up or a redistribution phase. This redistribution phase is where chop can occur. And so we become one of the only companies that can predict when chop is most likely to occur. So this is why I advocate trend entries, because while the counter trend entries can be chicken in the sense of chicken wings, there's a little bit of meat on those bones. In my pursuit to demystify how the market works and take that washing machine apart, I found that the trend entries are the ones that put me into the biggest moves as quickly as possible. So it reduces my pain. So if you take that mental screenshot and look at the euro now, I see that 1 o'clock right now really has the potential to be a short retracement, maybe 20 or 30 pips, or a congestion area. And if I can just hold on until Sunday night, there are more selling pressure times coming. 3 o'clock in the afternoon on Monday is a big one. 1 o'clock in the morning on Monday is another buying pressure time. Does that make sense, everybody? We're analyzing when the banks are doing what they're doing because they don't believe you're looking for those things at all. They don't think you know how random. They think you think the market is completely random. And there's no way that they could be doing this. And they're giggling. I think they're laughing their asses off the whole time. From the Rockefellers through the Morgans, all the way up through this current batch of 1%ers, they think we're dumb sheep, emotionally reactive, fear and greed-based, slot machine arm-pulling, one-arm bandit monkeys. And so I want to make the community smarter. We see a lot of information coming in about artificial intelligence and this company and Bill Gates this and Elon Musk that and artificial intelligence and Zuckerberg thinks this, and it doesn't really get down to our level here at the dirt, here in the bottom in the city, right? So I thought, let's make the indicators do what banks do. Let's make the indicators smarter. Any indicator for the last 20 years can tell you what's been happening over the last 30 bars. Every indicator that most people have is saying, look at what happened just now. And I said, well, what happens if we build one that looks this way? What happens if we build one that statistically tells us when the highest probability moves are coming in the future? How would that disrupt the model? What if we built that intelligence into traders, where they were watching for those moves, right? Now, one of the things that I want to mention to you is in regards to longer time frames. We offer 2 different packages depending on the level of pain that each trader is dedicated to pursuing. Most of the people that we work with are working on an intraday futures level, right? Markets like the E-mini NASDAQ, gold, crude, the mini Dow, the DAX, ES is one of the largest ones, of course. But we had customers that have been asking us for years about longer time frames. And I want to show you a second package of tools that we built called the Alpha package. Alpha picks up where Time Warp leaves off. And it tells us, for example, using this market here, crude futures, when to expect high energy moves from the banks based on their behavior patterns in the past. In the upper right-hand corner, you'll see there are 3 lines of text. Very simple. In 3 days, 10 hours, 55 minutes, and 41 seconds, we're going to have another one of these green dots. That day is coming in 3 days, 10 hours, 55 minutes, and 30 seconds. We're going to have another one of these red ones in 15 days, 10 hours, 55 minutes, and 21 seconds. We're going to have another green dot 30 days, 10 hours, 55 minutes, and 16 seconds from now. And so what we're able to do on a larger time frame is predict when to expect the kinds of moves that we're seeing. In fact, if you go on my YouTube channel, I'll put a link to it here in a second. I use these patterns in time to alert retail traders when to see certain things happening. So on my YouTube channel, backtothefuturetrading.com, this is just one example. I had a video called CL up or down from here. There we go. And in that video, I basically told people
this pattern back in
where the low was going to be,
what happened,
and where it was going to go next. And at the time, we were up at 61.30. The software had shown that this 180% fib was where the market was going to drop. And then you'll see that line right here carrying up, telling the traders that crude from this point, from that time, was going to reverse and go higher, all based on these behavior patterns, right? So back over here on my other workspace, I work with my customers to show them that analysis. And so remember, when the video was made, that's where the blue arrow was. And I essentially told people, look, we're coming down to here by this date, and on this date, crude will begin to move higher up towards this line. And so there was some $2,000 per contract of profit here. And when we were last studying it, there were 3,000 on the way up, a total of 4,300 on the way back up since then. All using times that the banks had leveraged to confuse people. So the gentleman before me was talking about bonds. And I had done an analysis in bonds on the YouTube channel using that same technique. Bonds up or down from here. And we had done an analysis over the last 11 years and shown that, hey, when this particular pattern in time occurs, right here, you'll see that blue arrow. We're expecting bonds to reverse and come up. The whole video took about half an hour to get through, but the time evidence was there. And now you can see where I've drawn that pink box. From 2011 March all the way through 2018 March, this is a play that they run. They trip the stops right at this time, and then they yank everybody's chain and go up the other way. But until you know the times to look for, until you have this time information, everything gets lost, and you get suckered into these traps. So let's take a look at some of the daily patterns that we've been looking at. CL now, again, there's nothing stopping it now until at least 3 days from now. So one of the things that I can do is take a vertical line. I can draw it here and go, okay, 1, 2, 3. That's how long I have until this next pattern kicks in. Let it go. Let the option fly a little bit longer. You've got 3 more days. So from here to here, 1, 2, 3, 4, 5, 6, 7, 8. You have 9, 10, 11 left. You might think about making your stops a little tighter because the window is almost closed. Does that make sense? We look at other markets too, for example, like gold. I heard one of the other gentlemen talking about gold futures. And this indicator is called the daily cycle marker tool. And it works a lot like the Orion tool, and it tells me in the upper right-hand corner, hey, the next signal is coming in 6 days and 3 hours. It's a phase 2. Well, what's a phase 2? There are 4 signals on this chart that repeat like the 4 seasons of a year. A phase 1, a phase 2, which is a large green dot, a phase 3, which is a small red dot, and a phase 4. So you can see generally when there's a phase 2 in gold, what tends to happen? Going back over the course of years, right? Do you notice that something generally tends to happen when we get into a phase 2 for the institutions? There's a surge. There's a push. Even if it's a small one, there's a push. And most of the time, 70–80% of the time, if you go back years, you'll see it's a place where the banks run the stops right before they try to push it up. So when I'm looking here at gold, and I'm listening to what the other presenters have had to say, they have wonderful information about levels and places that you might look at, but I'm the only person here that's saying, listen, there's a window of time. 1, 2, 3, 4, 5, 6, those are calendar days. And so trading days wise, you have 4 trading days before the next one of these occur. And you can see out of the last 5 of those, 4 of them shoot straight up. I look now at this market and I think to myself, if I were the banks, how would I trigger as much fear as possible? How would I trigger as many people into a short just before I'm about to go long? Think like the people who are screwing you. How can I make as many people fearful before 6 days from now? And now there are targets. I could run the stops here and freak a lot of people out. I could run the stops right here. Everybody's watching this candle. That's a decision bar, right? I could even run the stops here. So I'm predicting between now and 6 days from now that either this will be run, this will be run, or this will be run. Does that make sense, guys? One of those 2 things. Those are stops that haven't been hit yet. People are too comfortable. Porcupine, can you see in the upper right-hand corner? In each one of these indicators, it's telling us when to look for these moves to occur. So in bonds, for example, in the upper right-hand corner, it's telling me the next phase 2 is coming in 6 days and 3 hours. So if bonds is going to go up, if this bottom that I've predicted is correct, I'm waiting for reinforcements to occur. I'm waiting for the banks to drive that energy up at the next one of these signals. Okay, and if you look back historically, that can be a very large move. So if this long is going to work, if this really is the bottom, I've got about 4 trading days before that next green dot comes and maybe launches it back up. Okay. Oh, what is actually driving the program? I can tell you about 50% of the answer without giving away everything. And essentially 50% of the answer is based on an energy cycle. So there are energy cycles that that the entire world is subject to. One of the guys that first purported to understand how those energy cycles worked was this knucklehead right here. William Delbert out of Lufkin, Texas, kind of turned the whole trading world upside down. And Porcupine, he essentially theorized that there are energy cycles in nature. He studied everything from interplanetary gravitational cycles to laws in nature, flooding cycles on the Mississippi River Delta, for example, for his shorts in cotton and crops grown along that river. Gann had this theory that there's an energy driving how markets and people and nature are coordinated, how we are connected and react to different things. He referred to his approach to it as the law of vibration. And he essentially said that you and I, the banks, were all slaves to this tide, this ebb and flow of information, of energy in and out. So over the last 10 years, Porky, I've studied electromagnetic radiation. I've studied gravitational field theory. I've studied electric field theory, and the information that's coming from the daily cycle marker tool, as well as the Orion tool, are tracking those energy waves and projecting them forward into the future. Okay, so think of it like in Alaska, how once a year the sun goes away, everybody gets depressed, and the suicide rate goes up. We've all read that story, right? There are microwaves of that occurring in nature, occurring all around us, that the banks leverage and harness. They know when the population is most likely to feel anxious. They know when the population is most likely to feel elated and prone to making stupid decisions. If you're not sure about that, ask a police officer or a nurse what happens during a full moon. Go down to a hospital and say, how many babies are born when the moon is brightest in the sky? And so this portion of the software, Alpha, tracks those kinds of things and projects it forward, because I believe banks leverage our human vulnerabilities, and they pick dates where they know we're most prone to making those mistakes. So in this example, for Google, for example, those of you that are options traders, I would encourage you to watch for times between the phase 2 and the phase 4. Because you'll notice between the phase 2 and the phase 4, generally one of two things happens. And most of the time you'll see that prices are either right around where they started or much higher than they were, with the exception of this guy right here. That's where things kind of fell apart. And one of the ways I use to track the strength of a trend is I look and see if price was violated below the dot between the two phases. So between a phase 2 and a phase 4, I'm looking to see, Porcupine, did it stay above that price? And as we come into here, do you notice, Porcupine, how it violates that line right there? That tells me that the trend is destabilizing or weakening. And when I have a signal where it doesn't violate that line, there's no close below and it goes above, and it makes it all the way to the next signal, it tells me that the health of the trend is restored. So when we saw this puncture right here, it was a bad sign for the trend in Google. Now, there are two kinds of entries that I advocate in terms of trend trading these signals. One of which I alluded to earlier was the trend signal. The other one was the breakout. So when we're long in the market, for example, with an options trade, or we're buying and holding, we want to be long at these places where the phase 2s are kicking in, and you can see those reactions. We want to generally have stops right around these areas to make sure that we're containing the damage if things go wrong. But there are alternate signals here as well. We can look at these red lines and say, when is the selling over? When is the selling finished? And when it's finished, I want to be in that trade on a breakout. When is the accumulation phase over? And we're tracking when the banks are doing things. So in these examples here, when you see that that line has been violated, and this is the same trade that we were looking at intraday, that can be an options play as well. That can be a buy and hold as well. When they break through that dot, it's telling you that the selling phase is over, and there's a good chance they're going to drive it up until the next signal. And so we had that signal over here in Google just the other day. We're looking for selling pressure, but the banks called the dogs essentially off that play. And now your stop would be below that puncture candle right here. And you now know you have 6 more calendar days until the next signal arrives. So we are the only company, again, that kind of provides that timing information. And you'll see those same patterns occurring over here in markets like Tesla as well. And we can anticipate when those high energy reversal dates are kicking in. I'm particularly fond of how it works on the Euro US dollar, one of the most corrupt Forex pairs, I think, out of all of the different currencies. analyzing when those moves are coming in the future can be really beneficial, because in one of the videos I posted on our YouTube channel, they were luring traders into another stop run right here. And in the webinar, during the training session, I told people they're going to come up, they're going to hit it just above the high, and then drop it right back down. And they're predictable when you're looking for those sneaky illegal moves that they do, right? When is the next signal coming where we can expect some kind of an up move in the euro dollar? Well, we can look back consistently and see when those energy waves arrived, what happened when we got to a phase 2. I know in 6 days we're coming to one of those, and now Porcupine I can start to measure, well, how far does it usually move between a phase 2 and a phase 4? I can do an exertion analysis. Somebody said, can you predict how far the banks will go at those times? Well, take a look in the example of the euro dollar. Again, using their tools against them, using time against them, I can look and see how far did it go in between the two signals, looking for a maximum favorable excursion, right? And now I'm doing a study of them. I'm turning my dogs loose on them. And I can see, on average, at a phase 2, it goes between 44 or 50 ticks to 278, 174, 177, 236, 280. So it's somewhere between 175 and 200. 175 and 200. So when I come into the next phase 2, I have an expectation that the market should go up anywhere from 175 to 200 pips up if the move is going to work before things start to go hairy and go sideways. And again, everything is based on time. We can look at different markets and analyze those things and kind of work our way down. Look at things like soy and wheat and corn and bonds, and we're going to get that same kind of analysis, right? We're asking the computer, hey, what usually happens at these dates, at these times? And we can go back and study what the effects of those energy fields are on different markets. So the one I like to watch most with the daily cycles is crude and gold, and of course the S&P, those most popular markets as well. But if you're looking at this for stock trading and options plays as well, any of the alpha tools will work really good for that. I find that it's generally one or the other. Either the Orion tool works really well on an instrument, or the daily cycle marker tool works well. It's sort of a yin-yang. They're two brothers, kind of cut from the same cloth, but a little bit different. Okay, so let's head back over to the intraday workspace and sort of wind things down and wrap it up. I know that I've taken up a lot of everybody's time here today, and I'm really grateful for this opportunity. I wasn't expecting this at all. So if I'm a little jumpy or jittery, it's just that I'm hoping that what I'm saying is useful for everybody here. What do I want to say in conclusion? Trying not to be salesy here today, more of the other, if anything. I live by one mantra. And my dad, when I first started learning how to drive, he taught me something. He said, you need to drive like you've got a target painted on the back of a car. Pretend like everybody on the road is trying to hit you. And so I've built this program. This is probably the best thing I've ever engineered and built. I'm most proud of it. The problem is that there's nothing to touch. There's no timing belt. There's no gear. There's no computer control. There's no wiring. There's no frame. It's all little ones and zeros. But it's fascinating how intricate. It's more complicated than anything I've ever built. But the end result is something so intuitive and so simple to use that we're able to put it in the hands of ordinary men and women who have their aha moment. And here's kind of what I want to say before I leave. If you're using any of the approaches from any of the other vendors, if you're looking at volume, if you're looking at fibs, if you're looking at order flow analysis, if you're looking at volume spread analysis, if you're looking at market profile, if you're looking at Fibonacci clusters, if you're looking at any one of those things,
Order filled.
there are two elements. And Gann was really adamant about this. There's price and there's time. And you want to always pair those things together. If 90% of traders are losing 90% of their accounts within the first 90 days, and they're all in the wrong side at the wrong time, at the very least, our software will help you look at the information and ask yourself, am I being lured into a trap? Or is my signal that I'm seeing from my confirmation tool really telling me the truth? Is this buying volume? Or is this the bank trying to lead me into a trap? Is this really the fib they're going to react to? Or is this the bank leading me into another trap? Pretend like everybody on the road is trying to hit you. I've got a couple things for you here. I'm sorry it was short notice. I've created a book that kind of helps me understand what the times are telling me. And so I'm pasting that here into the room if you'd like to read through that. It's called A Hitchhiker's Guide to the Histograms. I think that it's really useful to understand how those times work. And then there are a couple things you can do back in our universe. The packages that I've talked to you today include the warp, the tachyon warp, and the tachyon alpha. If you're interested in learning more about those in our store, there's a brief description of how all of those things work, kind of a review of what I've told you here. And then if that's something you want to get involved with, we have training rooms, we have installation. I do personal mentoring for everybody who gets the software. For the intraday stuff, and then if you're more of a longer term, longer horizon trader looking for longer trades that are lasting days and weeks, that alpha package is probably better for you in the long run. And then a lot of people see good success combining the long-term stuff from the alpha with the shorter-term stuff from the warp. But between these two things, the warp and the alpha, you're going to see a lot of possibilities and a lot of traps that you were blind to, I think, before that. If you're just interested in knowing more about who we are and how this stuff all works together, please take advantage of our demonstration here on the website. Again, we're not trying to sell people. This sort of sells itself, and most of our referrals are coming from customers who are using the software and telling their friends, as evidenced by our invitation from Jim here today to check out what we've got going on. So if that's another thing that you'd like to do, I'd encourage you to do that as well. Lastly, I just want you to know that this one thing, it's important for me to make this true. The greatest engineers in the world are the ones who kind of take little pieces of the great stuff everybody else did and put it together. Steve Jobs didn't invent the iPhone. He didn't invent the Mac. But he took a lot of different pieces of things and he put it together where it was nice. It was beautiful, right? Elon Musk wasn't the first guy who put a rocket into space or put a battery in a car. That technology's been around for almost a century. But he did something different. The timing was right for something different to occur. And I love this quote from Ford who says, listen, every once in a while, everything comes together and you can build something amazing based on the progress of the people before us. And guys, I think I've built something pretty amazing here based on the progress of the traders and the men and women that have helped me over the last 10 years, of the great men of trading years gone by, Gann and Wyckoff and Elliott and those men. We're sort of standing on the shoulders of giants to present a piece of software, a method that analyzes when the people who are most likely to hurt us are going to raise their fists and punch. If you want to be on that side of the punch and do the punching, then we definitely think we can help you out. I am humbled beyond recognition. This happened all inside of an hour today. I hope I did good in terms of preparing for everyone here today. I'm sorry if I glossed over stuff pretty quickly. I want to thank everybody who invited me here today. It is truly an honor and a privilege. I hope that I didn't waste anybody's time. I hope I did more educating than selling. And guys, just remember, it's not easy out there. It sucks. It's the hardest thing I've ever tried to learn how to do, and I've watched more people break themselves on those rocks. More divorces, more bankruptcies, guys who've gone to jail. It's the darkest side of humanity that I've ever seen, and it's only getting worse. No one is coming to save us. No one is putting these fools in jail. No one's looking inside their black boxes to see what's actually going on. And I want to make a dent, and I'm thankful to the customers that have helped us make a dent and take some of their money back. So be careful out there is all I want to say. And thank you for your time this afternoon. It's really been an honor. Take care.